Well, thank you for joining the Geek group today. Before we get started, we'll read a quick disclaimer. Um, and that is that the topics, properties, and investments discussed are for educational purposes only. We do not sell securities. Each investor is responsible for their own decisions and must evaluate investments accordingly to their investment risk tolerance. Opinions expressed are those of the speakers and no one else. And to introduce our speaker today, we have the great Greg Donahue here. And he is a principal of 21 Georgia Investors. And 21 Georgia Investors is a family company started buying multifamily properties back in 2013. Greg is a partner. He partnered with his dad in 2014 to help manage the existing assets and grow their portfolio. They started with a 5 unit in Nashua, New Hampshire, and now have about 24 million worth in assets under management, totaling 248 units, and have gone full cycle on another 211 units worth about 15 million. He lives in Boston, Massachusetts, and is an avid Boston sports fan and likes to ski, as you could tell from his his good news. So I'll turn it over to him now and let him share.
Yeah. Great, thanks, Cabrin, and great meeting everyone just now. So I did prepare a presentation. So I think if I present now, let's see. Can you see my screen?
Yes, sir.
Yes, I see your screen. Oop, 21 George investors.
Yeah. All right. Now I don't know what I did, but I can't see you guys anymore. But you guys can hear me and see my screen, right?
We can hear you.
Okay, great. Great. So yeah, like I said, my company is 21 George Investors, based in Boston, Massachusetts. Been doing it since about 2013, and we bought, we've had about 15 assets here throughout New England, Chicago, Alabama, Maryland. We've done a deal in California as well, and we're looking in several other emerging markets, throughout the United States. I want to talk about asset management and team building today. And throughout my presentation, hopefully you can kind of get an idea of what we look for in sponsoring and partnering with people, and kind of what we emphasize and what we look for in different deals and partners. And I feel like asset management and team building is sometimes a little bit of the forgotten part of the industry. Educational programs, I think, touch upon it, but don't go too much into it. They mostly focus on underwriting and acquisitions, because I think that's a lot more exciting and fun. Asset management isn't the most exciting thing to do, but it's just as critical as any part of the business. So before I get into that, I guess I just want to kind of touch upon like a lot of the headlines that kind of grab our attention and sometimes pull our attention away of what we really should be focusing on and what we can control. Some of this is dated. I pulled some of this from 2020, so I kind of have 2020, 2021. So we have coronavirus, social unrest, the elections or politics in general. What's going on with interest rates. Where are we in the market cycle? What type of deal should I be going after? Am I in the right market? Is my market emerging? Is now a good time to invest? These are always questions that are always, I've been doing this, like I said, since 2014, and people have been talking about these same things since 2014, and they're going to, continue to talk about them. These are always going to be topics. And I think, it's always good to monitor what's going on in the broader economic climate, but it can also be overwhelming and kind of result in analysis paralysis sometimes. So I try to while I monitor that, I try to really simplify things. And when I'm looking at deals and markets and I find a property I think might be good, I just ask myself one question. How am I going to manage this property? And how am I going to successfully execute the business plan for this property so it can be a successful investment? At some point, you kind of need to get out of the whole market cycles and emerging markets and what's going on with interest rates in the world and just say, is this a good property? Can I manage this property? And can I execute my business plan to make this a successful investment for myself and my investors? I think implementing good asset management systems is, the way to do this. And I think sometimes it gets ignored, that the management of the asset or is kind of, looked at as something that's a hassle, the management of it. But I actually look at it as a good thing. It's something you have control over. You can determine the outcome of, you can add value directly to the asset. There's a lot to do, a lot in your control. You're not just riding a wave of the market. You're not just, riding the stock market goes up and down. You have no control over that piece of property. You have control over. It's a physical asset. You can add value directly to that asset. So even if the market kind of flatlines, if you find a good opportunity, you can still create value by adding value directly to that asset. Also, the locality of real estate mitigates volatility. Stuff that goes on in the broader, economic climate, as long as you're managing your property correctly, you'll sustain its value and it'll, usually always appreciates over time. So I think sometimes asset management gets looked at as kind of like a hassle, like people don't necessarily want to do it. No one wants to manage anything really, but it's actually really a positive that you get to kind of determine the outcome of your investment. So before you really get into the systems of asset management, it's really about kind of developing your team first. Like I said, or like Cabrin said in my introduction, I'm a big sports fan. So this is Bo Schembechler. He was an old Michigan football coach. He has a great quote, no man is more important than the team. No coach is more important than the team. He just says the team, the team, the team. So it's just a very strong emphasis on creating a good team and a good culture. And I think for me, at least, real estate investing has been a team sport, and it's been the main reason why I think we've been successful is by partnering with the right people and developing good teams. So I see a lot of people on LinkedIn and different networking groups. They talk about, when you're looking at making a real estate investment, what is the most important thing? The market that you're in, the deal that you're in, or the team you're investing in? And I see a lot of people always put the market first. Like, you want to be in an emerging market. That's number one. You have to be in an emerging market. And emerging markets are great. I'm not, discrediting them at all, but we've kind of flipped it and said the team is the most important thing. The market and the deal are secondary. You need to have a good team before anything else. Without a strong team, if the team doesn't have the ability to successfully acquire the deal or manage the deal, then the market and the deal don't even matter because you don't have the team to pull it off. And in this case, I'm kind of talking about like the sponsor, the people finding the deal, kind of all the general partners involved. Again, investors, they want to know who they're investing with. I don't think I ever see a LP investor just come across a deal and throw money into it. They typically want to know who the team is that they're investing with. A strong team can make a bad deal good and a good deal great. I think we saw this, in 2020 during COVID. a lot of people were able to sustain their value through COVID and come out even better on the other side of it. But a lot of those properties that you saw fail were because they had poor management systems to begin with, and they were only being successful because the market was supporting them. But as soon as the market crashed due to COVID, they fell apart like that. But if you have a good management team, you can manage right through that. And we found that we are investing in people just as much as we're investing in property or real estate. The people, when we sponsor a deal, we're investing in the people that we're sponsoring with, the people that we're sponsoring. We typically try to we're not just a passive sponsor. We partner, we stay involved in the day-to-day operations of the deals, and we want to enjoy the people we work with and believe in them and have a successful outcome. So we really feel that investing in the right people is just as important, if not more important, than finding the perfect deal, because you're going to be spending a lot of time trying to find the perfect deal. But if you can find the right people to make deals work, then I think that's the best way to do it. So then kind of setting up your asset management team, the critical elements. Obviously, you have the third-party management company. You want to get to know at least 3 management companies in any market you're going into. And this is one thing that I feel like a lot of the educational programs will say, when it comes to asset management, it's just, hire a third-party management company. And that's kind of where they leave it. But, there's still a lot more that you have a lot of oversight. There's a lot of bad management companies out there, a lot of systems you have to implement and have them execute those systems. So that's why you want to get to know multiple in any given market. In case you have to move on from one, or different management companies might just have different expertises in different asset classes and stuff like that. So you want to get to know multiple management companies. Construction management, if you're looking at heavy repositions, you need some general contractors. A lot of third-party management companies will have general contractors, or at least they'll say that they can be a GC, but you want to really vet that out, because they're really 2 different roles. The day-to-day operations and the construction management are 2 different things. So you want to make sure whoever's doing that has the bandwidth to do both if they say they can do both. But we typically like to separate those out into 2 different seats and have 2 different people in those seats. Then there's the GP team. So a lot of times you see these GP teams, general partnership teams, and there could be 5, 3, 5, 7 people as part of the general partnership, which again is completely fine. But you do need to have defined roles, like who is making the asset management decisions on the team. If you have 7 people trying to make a decision on every little thing, it's going to take forever. Everyone's going to be pulling their hair out. Same with construction management. Who's actually the one on the team overseeing the third-party management company, overseeing the construction management company, and making those decisions on behalf of the team. And then similar with financial oversight, just reviewing bank statements, reviewing the property management software, leasing, rent collections, overseeing, overseeing the bookkeeping, make sure bank accounts are being reconciled. You need someone on your team doing that as well. And then one thing we've kind of really emphasized over the years is having a boots on the ground partner as part of the general partnership. That's someone who lives in the market that you're investing in, someone who can drive by the property on a moment's notice, can stop by, really keep a close eye on that third-party management company. So that's something, it's not absolutely necessary, but it definitely helps when you have someone who has skin in the game, who's either a passive investor or maybe a GP and an investor, and they live right in that market, because third-party management companies at the end of the day, most of the time, don't have skin in the game. So you need to keep a close eye on them. So then, when do I start putting together my, boots on the ground team, and kind of who is that team? So I see a lot of people when they start looking at a market, it's all just calling brokers. You have 10, 15, 20 broker relationships, but they don't know one property management company in the market. So, I always say you should start calling management companies, the same time you start talking to brokers in the market. If you go do a market visit, you should meet with management companies as well as brokers. And it doesn't have to be just management companies. It should really be everyone in the market. Maybe you have family who lives in that market, friends who live in that market. Who do they know? Just really try and get to know as many people as possible within the market, kind of grow roots in the market. Economic development department, anyone you can know, electricians, plumbers, vendors, third-party management companies should have their own contractors, but especially nowadays, with labor shortages and stuff like that, it's always helpful to have as many, many hands as possible. So you really just want to get as many people in the market as possible. Then property management companies will really help you get to know the market as well. When you talk to brokers, everything's, sunshine and rainbows, rents are through the roof, but you really need to vet that out. And management companies are the people in the market, leasing units. They're the ones that have to get that rent. So see what they're getting, talk to them, talk to several management companies, see what they all say. They might say different stuff. Because some things we've run across in the past as well is you kind of get the management companies that just say yes to everything. You say, "Oh, can I get this rent?" And they say, "Oh yeah, of course." And they're just, they want your business. They're going to yes you to death. But then when it comes to execution, you don't really know if they can pull it off. So you want to have the management companies help you get to know the market, but you want to be doing your own research as well to see if they're just yesing you to death, or are they legit? Are they going to give you some, honest feedback on what, what's going on in the market? They can also help you find deals. Maybe they have, maybe there's a property they manage that the owner's selling, so that they have the inside track on that. And again, you don't know where your next deal is going to come from. Maybe you have family and friends in any given market, and somehow they, through word of mouth, hear of a deal. Maybe, you're talking to, some electrician, and he knows a guy that knows a guy. So it's one of those things you just want to know as many people as possible, and in any market that you're really looking into, and you never know when your next deal is going to come from. So just kind of keep your eyes and ears open. And then also just help with due diligence. A lot of management companies, if you get a good relationship with them, once you do get that property under contract, then most of the time they'll help you kind of perform your due diligence on that property and do the inspection and help you out with the budget and stuff like that. So it's always helpful to have that team already in place. So when you get a property under contract, you can just jump right into it. So third-party management, just trying to, vet the as you're talking to management companies, what are you looking for? You want to make sure the asset class, the asset size, and the investment strategy align with the management company's strengths. So some management companies are great at leasing up Class B properties, or some are great at, Class A properties or Class C properties. But then if you ask them to bring a Class C property and reposition it into a Class B property, that might not be their strength. So they all have different strengths and weaknesses. Same with property size. Some management companies will just say, 100 units plus, we need on-site payroll, no flexibility. Others will be a little bit more flexible. Maybe they can share resources, do smaller deals. And again, with the strategy, are they strong with repositions? Are they strong with leasing? Match their strengths with whatever the asset plan is that for that specific property. And again, that's another reason why you want to know multiple management companies in any market to have different options for different types of properties. And we actually ran into that before. We had a management company. It was like a C property C plus property trying to bring it to a B. Management company had great references. They were very well known. So we thought it was a can't miss, and they were great at putting up marketing materials and signage and stuff like that. But when it came to executing the kind of the reposition and bringing it from a C to a B, they just weren't really able to pull that off. So it's just really getting to know what are the strengths and the weaknesses. And then just alignment and do they own their own properties or do they just manage? If they own properties, you just want to be careful that your property is going to be kind of like a second tier property to them. They're going to focus on their own properties, and yours is just, kind of like, their second job or something. I wouldn't say that's a deal breaker. We've worked with management companies that own their own properties as well, and it's worked out great, but you definitely still want to make sure, all the motives are in the right, everyone's motives are aligned. Same with fees that management companies will charge. If they're charging leasing fees and if they take the late fees instead of giving you the late fees, stuff like that, just be careful of that, because they should really just be taking their one management fee based on their collected rents. But, it's just something you always want to look into. Then experience in the market. Obviously, you want management companies who know the local market very well and have experience. Ask for references, so you can, preferably for properties in that market as well. Sometimes management companies will be great in maybe a market an hour or two away, and they say, oh yeah, we can move into this market, and no problem. We'll definitely be able to do that. And even though they're very well known in Birmingham, Alabama, once you ask them to move to Huntsville or Montgomery, Alabama, they're just not able to do it for whatever reason. But or because they don't have the staff there, So make sure they're established in the local market that you're looking in. I would say understand their company. Something I definitely didn't do early on is really getting to know the management company that I'm talking to. Usually you're just looking for that market information, like, oh, can I get these rents, and how are you going to manage my property? But they're a company as well. They have their own operations, their own systems. In some cases, you're talking to somebody, but he's kind of like the salesman for the management company. And then when you buy the property and you start to do the actual management, you get passed over to somebody else. And it's someone you've never even talked to before. Now they're the one managing your property. So just when you start talking to management companies, make sure you're talking to the right people, the person that's actually going to manage your property. Or a lot of different management companies have different regional managers. So make sure you're going to be you're talking to the regional manager who's overseeing your property, and not just the guy sitting in the main office. And then also just kind of understand their systems and kind of how they run their own operations. We actually had one company that essentially went out of business as they were managing our company. As they were managing our property, they were doing a great job on our property. We actually had them take on a second property, and we started to notice that things started slipping through the cracks, and they just weren't doing that good of a job. And I guess one of their partners retired, and the second partner tried to take on a lot more than she could really handle. and they ended up going out of business as they were managing our property. So it's just one of those things you want to make sure that their company's being well run as well. Then understand how they're going to manage your property. Are you going to have on-site staff? Who's going to be the regional manager overseeing your property? How often is the regional manager going to be visiting your property? How local are they? Are they going to be there once a week or once a month? Same with construction management. Understand how they'll handle that. Do they have a in-house construction management arm, or do they just completely outsource construction management? Both are fine, but you just really want to understand, again, that those are two different seats. You want to make sure they're handled separately. If they just say, oh, we're going to have our on-site manager manage the property and she's going to be the GC as well, it's like, well, that's way too much for one person to handle. You need to make sure those are separated out. Also get a sense of their extended team, their different contractors in the market. If they just say, oh, we're going to handle everything in-house, we'll be fine. I highly doubt they have the resource, if 5-10 units all go vacant, depending on the size of the property, if they all go vacant at the same time, you need those outside contractors within the market to, you might need some extra hands to come over and help out with the property. So if they don't have those people, then you're going to be stuck with some vacant units, and you're just waiting on their staff to get them ready. But so who's their extended team in that market to come help out when things kind of go a little bit not according to plan. Then kind of on the financial side, bank accounts, make sure you're the one setting up the bank account and give them the signer access to it. A lot of management companies will just want to use their own bank account and just give you kind of reports. We've even run into a lot of management companies that kind of commingle funds they just have one big account and manage all their properties out of that account, and they just run it by like ledgers, property ledger, a ledger for each property. And, you definitely don't want to do that. You want to have control over your own bank account. Same with the property management software. You don't want to just wait for them to provide monthly reports. You want to have daily access to that property management software that you can just sign in and pull any report at any time. Some management companies will say, oh, the software doesn't allow you to do that, but that's just because they don't know the software well enough. You definitely are able to do that. And then, see if they'll help out with, the underwriting and the due diligence. So then in terms of systems, again, you're really putting the asset management plan together during the due diligence process. If you have your management team in place, you should be able to hit the ground running and start putting that asset plan together during due diligence. You don't want to be trying to find your management company as you're going through due diligence. And you're finding your management company, you're trying to get financing, you're trying to raise money all at once. You kind of want to have that management company ready to go and your boots on the ground team ready to go to hit the ground running right when the due diligence starts. And then you set your asset plan, and then you have to obviously execute on that asset plan. And that's really when you bring your underwriting template to life. Before then, it's really just a spreadsheet. You're plugging numbers in and, trying to make the numbers work. But when you start operating the business, you actually need to meet those numbers, and you have to, get the projected rents and manage your expenses. So, how are you going to do that? I would say one big thing I see is on people's underwriting is cutting down loss to lease and cutting it down significantly from year 1 to 2 and 2 to 3. Just because the market rent is much higher than their current gross scheduled rent, there's still going to be a time period where that, it still takes time to get it from where it's currently operating to the market rent. So how long is that going to take? A lot of people just cut it all out the first year, but that's kind of unrealistic. So as you're going through and setting your asset plan, you kind of want to manage the KPIs, like how many, what amount of rent you need to raise each unit to get to your year one or your year two gross scheduled rent. So if it's like, and you might have different KPIs for each type of property. If it's heavy reposition, your KPIs early on is like how many units can you get ready, per quarter to then lease those up. So, if the property is 50% occupied and, you want to get to, 100% occupied by the end of the first year, you say, all right, we need at least make ready 5 units per month, and then lease those 5 units. And I'm just making these numbers up, but like manage those KPIs and try and map that out. What is your gross scheduled rent? Then work backwards to try and find out, how many units do you have to make ready? What rent do you need to get? What's the rent increase you need to get on the existing tenants? And then kind of plan that out with your management company. Is this realistic? Are we able to do that? Can we turn, 5 units per month? If you have to turn 20 units per month to get something done, then it's kind of like, I don't know if we can really, is that really realistic? I don't know. And then, you want to put the KPIs in writing as well, accountability and tracking. One thing we do is there's a Monday morning report every Monday morning, or just every Monday. We have our on-site manager give us a report that covers the current occupancy, move-ins, move-outs, traffic on vacant units, how many units have been made ready in the past week, and it's just accountability and tracking, and what gets measured gets done. If you just talk about it on the phone and you say, oh, what happened last week, it's good to get a verbal report, but when it's on paper, it just means a lot more. And so having them put that down in writing, I think is really helpful. Sometimes they'll say, oh, all those reports are up in the property management software, but a lot of the times they don't always update the software in real time. They might do it a week later, or they just reconcile it by the end of the month. So having someone do that every Monday and putting it in an Excel spreadsheet and emailing it over to you really holds them accountable. And again, you put every Monday morning report, you can kind of modify depending on the KPIs you have for that property. Again, if it's a heavy reposition, you might have slightly different KPIs, kind of more geared towards, the construction side of things versus a stable property. It might just be more like rent increases. So you can kind of slightly tailor it property by property. Keep an eye on the bank accounts and the management portal. You need someone part of your team that's always has an eye on those things. Budget versus actual. It's good to either have your management company create a budget, or if you're creating an operating budget, or if you're creating the operating budget, run it past them and have them sign off on it, at least verbally, have them say, yes, we can hit this budget. So if they don't hit it, you can say, hey, listen, you said you could hit this, like what's going wrong? Why are you not hitting this budget? And you can try and identify the problems and then solve those issues. Then the boots on the ground partner, again, something we always try to emphasize, have someone local to the property that can drive by the property without giving the management company notice, hold the management company accountable. Maybe they're not doing a good job cleaning up. We're up here in New England. Maybe they didn't shovel the sidewalks after a snowstorm, stuff like that. And also boots on the ground partner can help out with, managing contractors as well. Hopefully they don't have to. Hopefully the management company covers all that. But again, if the management company's not, fulfilling their responsibilities, sometimes that boots on the ground partner can be a great kind of safety net to kind of jump in and help out to keep things moving forward.
Hey, Greg, I want to just interject real quick.
Yep.
I know you're doing great. I just want to let you know that you probably want to start wrapping up here soon, just to give some people time for question and answers.
Yeah. Yep. I got one more slide after this. So.
Okay. Perfect.
So yeah, then I guess just communication. You obviously want to communicate with your management company and your boots on the ground team. Have monthly calls, construction calls if it's early on in the process and you're going through the transition, or if it's a heavy reposition, maybe you want to do weekly calls at first. But that's one of the main reasons why you want to have those weekly Monday morning reports. So you kind of can get updates on the key performance indicators on a weekly basis. And if you're hitting all those, then there's probably no need for a weekly call. You can probably just touch base on a monthly basis. If you're not hitting your KPIs, then you need to probably implement a weekly call to kind of get back on track and discuss the issues more frequently. Then flow of communication, make sure you're talking to the right people. In the flow of communication is getting to the right people. We've had issues where you tell, maybe the regional manager something and it's supposed to flow down to the on-site manager. And then the on-site manager says, oh, no one ever told me to do that. And then the regional manager said, oh, I told you to do that. And it just kind of creates, drama. And obviously, no one likes drama. So, you want to make sure the flow of communication is correct. And also, we always like to develop a relationship with our on-site manager. And this has actually saved one of our properties where our third-party management company wasn't doing a great job. We really liked our on-site manager. We started developing a relationship with her. The management company started blaming the on-site manager for certain things. The on-site manager was blaming the third-party management company. So it was kind of like, who do we believe? We ended up firing the third-party management company and keeping the on-site manager and just overseeing her directly. And we turned the whole property around that way. So that was very, having that relationship with the on-site manager really paid off in that scenario. So again, just to, I guess, kind of wrap up, rather than, again, it's always good to keep an eye on the broader economic climate that we're investing in. But at the end of the day, if you've made a decision that you want to be in real estate and you want to invest in real estate, then the main thing you should really be trying to do is develop a local team in a market you want to invest in, to manage a physical asset and create repeatable processes to free up time to then buy more properties. So again, just try to kind of, if you're stuck with analysis paralysis or always looking at what's going on with interest rates and stuff like that, I think main focus should really just be on trying to manage, by setting up the management systems, you can mitigate a lot of the things that go on during a typical market cycle. So that's pretty much it. I had some other, a few more slides, just kind of more based on our, what we look for in partners, but I think you kind of hopefully got a decent idea that we're very have a strong emphasis on our team and management, management focus. So I will leave it at that.
Hey, Greg, I have a question. This Adler,
Yep.
this is a very timely information that you shared, man. Very good. Just one simple question. What does KPI mean? Key performance indicator?
Yeah, sorry, I should have clarified. Yeah, key performance indicator. So
I see.
You can kind of set different ones. So I guess like your gross scheduled rent would be a key performance indicator. It's like you want to hit a certain gross scheduled rent per month. Maybe you want to collect $60,000 worth of income. Right now, you're only collecting $55,000 in any given month. So how do you get from 55 to 60 in a month? And you just kind of go back and have to map that out.
Yeah. I was struck by your statement that when doing the analysis, sometimes many units are not yet at the market rate rents. So what you
Mhm.
do is, so part of the analysis would be to assume that the units already have the market rent, but we have to specify at what year will they be able to reach that market rate rent, and because that takes time, and that should be factored in the equation of analysis. And you're right on that. And
Yeah, I
thank
would
you very
just
much
say,
for
I
that.
mean, if rents are $200 below market, and you go and you say, oh, I'm going to go and raise rents $200 day one without doing anything to the property, and you just assume every tenant's just going to say, oh, yep, I'm going to pay $200 more in rent.
Yeah.
You can definitely do that, but then you have to probably factor in a higher vacancy rate your first year.
Yes.
You're going to have more people move
Yep.
out, then you have your
Yep.
turnover time. So you just need to map it out essentially, and be realistic with how you're going to accomplish those goals.
Thank you, sir.
Hey, Greg, when you're looking at a new property in a new market and it needs some heavy lifting or some capital investment, how do you do and you want to get your offer in a timely period? How do you go about getting a number on those capex improvements and factoring that into your offer?
Yeah, I mean, I would say again, that's where kind of having your local team assembled is a very good advantage. Whether it's a management company or you have a partner, a GP, but a general partner that you're partnering with on that deal. Maybe they have a construction background. I mean, I would say a real life example I have is we have investments in Chicago, and the people we partner with there, they have a construction background and a flipping background, so they can go walk a property and they say, oh yeah, they can just kind of come up with the capex budget. It won't be exact, but they're pretty more confident than I would be. I'm more of a finance, the finance side of things, I guess. So they can kind of come up with it pretty quickly, a pretty strong, confident estimate. So that's what we kind of utilize there. Or it could be a third party management company that you have developed a relationship with that that can walk the property with you, and they'll give you feedback on that.
So don't rush. Put your team in place first is what I'm hearing. Huh?
Yeah, I mean, that's what I would say. I mean, if you have now, if construction's your strength, everyone has different strengths. So maybe if for someone else construction is their strength, so they can say, "Oh, I'll walk a property," and they have no problem with it. That's the easy part for them. But then they probably struggle with something else. Maybe
I imagine building costs are different in different markets too. And it really takes some local expertise. Huh?
Yeah, I definitely would agree. And yeah, I would say that's not my expertise either. So when I partner on deals, I definitely look for someone who's a little bit stronger on that side of things.
Thanks, Greg. Good presentation.
And Greg, and another thing that another insight that you shared that really struck me is that when you begin to talk to brokers, also begin to talk to property managers, and that was something new for me. I never thought of that. Yeah, and so thank you very much for that.
Yeah.
And number two, will you be able to share your presentation material with us?
Yeah. I'll send it to Max. And
thank you, sir.
okay,
Thank you.
no problem.
I look like Darnell had his hand raised. You want to go ahead and ask your question, Darnell?
Greg, thank you for your time this evening. First of all, my question is, when you are looking for boots on the ground in areas outside of your backyard to assist you with your investments, do you have any other creative process other than speaking with property managers or other people in the industry?
So are you saying, like, if you were to go into a market and try and find a boots on the ground partner?
Right. I think you spoke on this a little bit. Like, I know you can talk to property managers, you can talk to other investors, you can talk to appraisers, anybody in the industry in that area to build a rapport and possibly partner.
Well, I mean, I would say what you're doing right now is a great example. Just networking. You never know who you're going to meet at these events. If you meet someone that's in a market that you're interested in and they live there, right there, that's a connection. And you kind of just stay in touch with them. Maybe it turns into something, maybe it doesn't.
Mhm.
You obviously want to vet the people. You don't want to just jump into a partnership with somebody. It's a long-term relationship. I know, you want to vet the values, and I know, Max and Ben are obviously big on, the values, and that when we have, those, we implement the EOS values as well. So, but yeah, I would say networking in general, coming to these events, I met Max again years ago through, RE Mentor. We've invested in the same deal together, but we've never been co-GPs on a deal, but we've shared, we've looked at deals together and never quite worked out. But like I said, it's a team sport. So when you come to these events, you're just building your network, and they could potentially find, boots on the ground partner at these events. So.
Okay. Thank you.
Very good.
I think Charmaine.
Question.
Yes. Hey, Greg. Are you on your dad? I think.
Yeah.
Open to GP in deals right now, and what market are you focused on?
We are definitely open. We are actively seeking new deals right now. So yes, we are open to it. And I would say, the Carolinas has been a market we've been looking at, mostly North Carolina, but a few different submarkets in North Carolina we've been looking at. But again, I would say what we've found and where we've had the most success is with the relationships and the people we partner with. We're in Chicago and we're in Baltimore, two markets, not emerging markets, two markets we weren't looking in, but we developed strong relationships, people finding strong deals in those markets, and they had experience and management experience, and we felt very comfortable partnering with them in those markets. And those have been very, Baltimore we just got into, but Chicago we've had a great experience so far. So there are markets I do look at myself. But yeah, I would say, if you're finding deals and you're building relationships in any market, we're interested if, there's a good kind of story behind it, and we have that boots on the ground, partner, then I'm not saying we'll 100% do it, but that's a big check mark on our side. So.
What's the size deal you're looking for?
Again, I would say it comes down to, we're trying to get to that 100 plus, mark, obviously, but we are open to smaller deal, like 50 units and above. And again, it comes down to how are you going to manage the property? If you're under 100 units, I think you really want to have that boots on the ground partner. That's what we have in Chicago and in Maryland. We wouldn't have bought a 15 unit in Baltimore if we didn't have someone in the market to really keep an eye on it. And so I think the smaller deals, we're open to the smaller deals, but then that boots on the ground is even more of an emphasis, because you're not going to have the on-site payroll, on-site staff on your properties. So if it's in your backyard, I guess I would say the shorter answer would be, if it's in your backyard, we're more flexible. If it's not in your backyard, probably, the 100 plus type deal. So.
Okay, thank you. Baltimore is our backyard, so.
That's is it? Okay. Yeah.
Yes.
Yeah. We just bought a property in the Mount Vernon area.
Okay. All right. Good. Thank you.
Thank you. Tyler?
I know we're winding down here, so I'm going to try and get this question across as summarized as possible for you, Greg.
Yeah.
Bit of background, though. Recently just passed on a property in West Virginia. Everything checked out really nice. The pro forma was looking really good, but I backed out because job growth and population growth was pretty stagnant. and it had an underlying market driver in heavy and oil. So I looked at those metrics and I thought, okay, hey, not the right property to get involved in. Speaking from someone like yourself that is actively involved in markets that aren't considered emerging, besides having a strong team on the ground, what other metrics are you looking at that make you feel comfortable going in there?
Yeah, no, that's a great question. I would say diverse local economies. So, like you said, if a market's just driven by the oil industry, it's a one industry town. That would definitely scare us. Again, going back to Chicago and Baltimore, they're not emerging, but there's tons of universities, tons of hospitals, biotech. Chicago is the third biggest market in the country. Like it's the population is slightly declining, but it's not gonna go to zero overnight. It's still a pretty stable economy. Same with Baltimore, many economic drivers, close to DC as well. Government is there as well. So it doesn't, obviously we would love to get into the emerging markets and stuff like that, but our bigger, having the diverse, local economy is kind of the requirement. Then the emerging, job growth and stuff like that is kind of like the gravy. So I would say.
Makes sense. Thank you.
Yeah. Thanks.
Any other questions?
Greg, I get the impression, at least when your father presents the business, that you guys are okay with maybe older style properties that have some character, and is that a specialty that you guys have?
Yeah, I don't know if I'd even call it a specialty, but I would say that we're from New England, and a new property, if it was built in 1920, that's pretty much new here in New England. So,
that doesn't scare you guys, right?
Yeah. So that's just how we, how we got started. Like, all our buildings were like 1900, and that's kind of just what you bought around here. So, I would say we don't, shy away from it too much. I guess we have kind of learned a little bit that, here in New England could be an older building, but it was built for the colder weather. It was built for New England weather. I think when you get into the Southeast sometimes, or some of these other warmer climates, they build them one way for the warm weather or something like that. So when they get, I don't know, I guess I'm not an expert, but I think, some of these 1900 buildings seem to hold up better than 1970s. So I don't know.
Here in Southern California, if it's in the 90s, it's getting pretty old.
Yeah. So but nice brick 1920 building. I don't see anything wrong with that.
Wow. Okay.
All right. Well, we're about 7 minutes till the end of the time frame. So if everybody's minds are clear, I guess we can go to the rate and rat portion. You can find that on the L10 document. I'll start by, I went on to put mine in here at the bottom of the L10. I give the meat and the 9. I do want to, I appreciate this because this is, and I'll just make a quick point. I do a lot of system creation but what I realize is a lot of the systems that I've been creating is like up to asset up to closing, but like that process of after acquiring the asset and really managing where the money is actually made, I often overlook that. I think in a lot of operators, they especially newer operators are, we're just like, we got to get a deal, and then you overlook this huge piece that actually determines if you're successful at the end of the day. So I really appreciate you sharing today. Very awesome.
Thank you. Thanks.
Hey, Greg, from your own experience, what would be the most unbelievable negative experience that you have had in dealing with third-party property managers?
Yeah, I would say it was that company that went out of business. Pretty much, I don't know if it officially went out of business, but they pretty much were in the middle of a sale. We were selling a property, and they pretty much just quit on us. And we heard through the grapevine that they kind of dropped a few other clients as well. So I think they either went out of business or were pretty close to going out of business, and they pretty much just stopped managing our property, just stopped showing up to work essentially. And we were in the middle of the sale, so it really did not help us at all. And that was a property we did not have a boots on the ground partner on. So that's when we were like, all right, we need a boots on the ground partner for deals.
So did you report the company to the Attorney General's Office or the Consumer Protection Bureau of the state or something like that?
No, honestly, we sold the property and we just moved on. Yeah.
Okay.
Yeah.
Thank you.
Yeah, no problem.
All right, well, I guess moving on, I think we got Max, your rating for the meeting.
I'm a 10. Thanks, Greg. It's awesome. And we're rating the meeting, not the person. And if you're a 7 or below, you got to say what you're scoring at that for. If not, if you're 8 or above, you can just say the rating. And the whole idea is you don't want to leave the meeting without getting something off your chest.
Thanks, Max.
For me, it's 10. Adler, 10.
Great. Thanks.
10 also for Greg, by the way. Not just Thank you, sir.
Great. Thank you.
For me, 10. Good job, Cabrin and Greg.
Thank you.
Thank you. Mary?
Probably me. I'll give you a 9, Greg. I gotta find some boots on the ground.
Thank you.
I was away.
Darnell?
I give it 8.
Thank you.
I give it a 10.
Thanks.
Thank you, Greg.
Thank you.
Awesome. Last but not least, Tyler?
Give it a 9. Thank you, Greg. Topic that is not talked about enough. To Cabrin's point too, it's kind of like being a wide receiver. I'm still in my Super Bowl, phase. So being a wide receiver and like getting ready to catch the touchdown pass, but you're looking too far towards the end zone and then you drop the pass. And it's kind of like, acquiring a property and thinking, okay, that's it. But remembering that there's that whole management portion. So thank you. And Cabrin, thank you for being MC. Appreciate it.
Yeah. I guess I'll thank you. And I guess I'll give it a 9.9. Never want to give it a full 10. Always room for improvement. But I definitely appreciate it. Still working on my presentation skills, so appreciate the opportunity to come and present. And Cabrin, you did a great job emceeing, and Max is always a great job. So appreciate everyone being on.
All right.
Thank you, fellas.
I appreciate you.
Yeah. Thank you, Cabrin. Thank you, Greg.
Thanks, everybody.
Have a great weekend.
Thank you.
Have a great week.
Good one.
Have a good weekend.
Bye-bye.
Have a great weekend, guys.
Bye-bye.